Okay, this video is the most important 8 golden rules used by the richest traders of all time. This webinar is being presented by www.zentradingstrategies.com, and these 8 golden rules are really all you need for trading success. The first golden rule of trading is to compound money. Now, if you started with $10,000 and you doubled your money every year, how much do you think you'd have in 10 years? Maybe $500,000, maybe $1 million. Well, let's take a look at the next slide and look at an actual chart of it. So this chart is compounding the wealth over 10 years, and starting with just $10,000, by the end of 10 years, you will have accumulated over $10 million. By year 7, you pass the million mark. So just over 10 years of doubling your money, starting with 10,000, you will over 100x your money in 10 years. Now, with that being said, trading is not gambling and is definitely not about getting lucky. Successful trading and wealth building is about consistently good risk and money management. There's a legendary quote by Seykota, who is one of the best traders widely considered of all time. And he says, there are old traders and there are bold traders, but there are very few old, bold traders. So let that quote sink in for a second and think about what that means. Essentially, you may be able to get lucky once or twice, but over time, it will catch up to you sooner or later. All it takes is one time for the market to wipe out your whole account in an unexpected move if you don't have proper money management. Now here we have a nice picture of another genius. Many of you may know him, Albert Einstein. And he had a quote saying that compound interest is the 8th wonder of the world. He who understands it earns it. He who doesn't pays it. So looking for opportunities to compound should be your primary goal as a trader, not trying to hit 1 or 2 big trades, then calling it quits. Now moving on to golden rules number 2 and 3. 2 is to ride winning trades until the end, and 3 is to cut losing trades quick. Now these 2 golden trading rules are 2 that go together, and most people do the opposite here. Most people take their profits way too quickly, and they also hold on to losing trades thinking or hoping that the market will turn around and that they can get out of the losing trade with less of a loss. Now what happens usually though is the opposite. Their loss continues to get bigger and bigger and bigger, either until their entire account is liquidated or they are forced to exit their trade at a much bigger loss than they could have if they didn't continue to let it get larger and larger. And what we call that is smoking hopium. And what that means is that they get lost in the hope that the future may turn their luck around. But the reality is that the majority of the time it doesn't. It may happen once or twice, but it would be a fool's game to hope that it will. All it takes is one time for it to not go your way. And when it doesn't, your entire trading account will be wiped out. Not following these 2 golden trading rules cause the majority of people trading to lose their entire trading account or never grow into something meaningful. And here we have a nice picture of some happy faces, some sad faces, some angry faces, all kinds of different emotions. And the reason most traders don't follow these 2 simple golden trading rules is because when it comes to writing winners and cutting losers quick, most people let their emotions get in the way. Now, it's easy to say that you won't do it, but once you're in the middle of a trade with real life money that actually means something, this is where emotions will really creep in. Most people get into some profits, and as soon as they do, they take their small profits. And this is maybe because they're scared of losing what they have, so they take their small profits. Or maybe they're excited that they actually made something, so they take their small profits. Whatever it is, they never exercise patience and allow to grow their money. And sometimes big trades don't come around very often, and you never know when the trade you're in will be the big trade until it's over with. But that one big trade in a year can be all the difference in being profitable or unprofitable. If you get out too early, you may never catch it. And if you hold on to a losing trade in hopes that it will change or reverse, your trading account may never live another day. Golden rule number 4, manage risk. Managing risk really comes down to 2 parts, using stop losses and using correct position sizing. Here we have a picture left of what a stop loss is. You can see here that maybe the trader bought over here, and they said that if their trade goes underneath this level, that they will have a stop loss here. That way, if it continues to go down, they won't experience that loss. So you can see this guy was wiping his forehead sweat off. He avoided all this loss. And a stop loss means that if you're in a trade and you lose a set amount, like what happened here, lost a little bit, you exit the trade immediately. So we can see that this picture to the left. And a stop loss can be any amount. It can be a set dollar amount, maybe like $500, or it could be a set amount like a percentage of your account, maybe like 1% of your account. Now, what is the right stop loss for you to use? Well, that depends on 2 things. It depends on how much you can risk losing and feel okay with, and also what the expectancy of your trading system is. Now, if you're like this guy over here and you're wondering and you don't really know what the expectancy of your trading system is, turn off your computer. You should not be trading. Now, if you want to find out what the expectancy is, you can use a trading view strategy, and you can see the performance of a strategy. We'll go over this at the end of the video, or you can visit www.zentradingstrategies.com. Position sizing is the other part, and that's quite possibly the most overlooked factor in trading. You never really hear anybody talk about it. Now, what position sizing means is how much of your account should you use to enter a trade? Should you just use all of it, or should you use less? Now, position sizing also depends on your trading system. Let's say you have a strategy that does well and it uses a 5% stop loss, but you only feel comfortable losing 1% of your account in any given trade. That would mean that you should only enter with 20% of your account. That way, if your 5% stop loss gets hit, you only lost 1% of your trading account. That's proper position sizing. Now, keep in mind, though, that using less of your account balance means that when your winning trades do come along, you also will make less money since you used less money to begin with. So successful trading is all about finding an optimal balance that works for you. There's really no one that can answer that for you but you. Some people are willing to take more risk, some people take less risk. But overall, the idea of successful trading is to stay alive until your big trades come. By using proper stop losses and proper position sizing, those allow you to do just that. Over here we have a nice picture of a legendary trader named Seykota, who we've learned much from. And he had a saying about risk. He said, "How do you know if the risk is right?" I need a very simple answer. He says, you make a lot of money and you sleep at night. What a simple quote that is. So you make an amount of money that's actually meaningful to you, and the amount you risk to do it leaves you unworried, not thinking about it, and leaves you not interfering with your trading system. That is the epitome of Zen trading. Golden rule number 5, use stop losses. To be successful in trading, using stop losses is a must. We just covered this in the last couple slides. Now, what we're about to say, though, is so important that we're going to put it all in caps. And we have a nice quote from Warren Buffett, who most of you know is a legendary investor, and he said, "It is more important to not lose money than it is to make money." Now let that one sink in for a moment. Your trading account is your capital engine. It takes money to make money in trading. So if you lose your money, you can't make money. And if you let your account dwindle down too much, you also lose your compounding power. So capital preservation must always, always be number one. A successful trader must have the mindset that he is a risk manager, not a profits manager. And if you manage your risk properly, the profits will take care of themselves. Here we have another nice picture of Warren Buffett. Again, it's more important to not lose money than it is to make money. And the way to do that is to make sure you don't lose your account by using judicious stop losses and proper position sizing, all parts of managing risk. If you treat trading like a get-rich-quick scheme, one thing will be certain: you won't get rich, but you will lose all your money. You have to have a long-term mindset to be ultra successful as a trader. Being a trader really is just being a wise money manager. Golden rule number 6, manage your emotions before they manage you. Over here to the right, we have a nice little picture of all kinds of different emotions. There's obviously many more than those, but in the course of trading, many of those emotions will creep in, and you'll have to know how to manage them. And this part really sounds easy, but even with the best trading systems in place, if a trader's emotions are not in check, his emotions will cause him to override his system. Now, some examples. What happens when you thought that you have a really good trading system, but you actually lose a few trades in a row? Do you start doubting your system? Maybe start trying to tweak it? What happens if the exchange you're trading on goes down for an hour during peak times and you can't access your trades or orders? What happens if an order didn't get executed properly? How does taking a loss make you feel? Should you win every time? How does making a win make you feel? That you'll win next time? What happens if all of a sudden it seems like you just can't lose? Everything's going right. Everything just seems to keep going up in price. What do you do then? There's countless such situations, and all will test your emotions as you encounter and experience them in real time. This leads us to the next golden rule of trading: stick to your system. Golden rule number 7, stick to your trading system. It's really easy, as we just went over, for emotions such as fear, doubt, anxiety, hope, uncertainty, greed, and there's many more that can step in. And every trader must learn to accept each of these emotions and befriend them. Each of these emotions has a positive intention, and it is up to the trader to discover what they may be. For example, uncertainty, the emotion of uncertainty in trading when it comes up. It may have the positive intention of making a trader want to use prudent risk management, so any uncertainty that does come up is managed. A trader must know himself and study his emotions that his trading system will bring him. Only then will a trader be able to stick to his system. Now, these situations mentioned in the last slides, They will happen, and you must know ahead of time how you will react or how to manage them. For example, if you lose several trades in a row, it doesn't necessarily mean that you have a bad trading system or that you have to throw it away or redo it. It could just be a random distribution of poor trades. Now, if you study your trading system thoroughly, you can know this possibility ahead of time and be prepared if it happens in real time. If the exchange you are trading on gets overloaded for a few hours due to excessive traffic and said you can't access it, are your orders already in? If you win several times in a row and the market seems to be unstoppable and you just can't seem to lose a trade, do you all of a sudden say, hey, I'm going to start using 2 or 3 times more money to trade? Again, there are countless situations that will come up, and to be successful long-term in trading, you must have a system and stick to it. No matter what random events happen, and I haven't covered them all, you must stick to the system. Now, it's important to know that having the confidence that you actually have a good system to begin with is key. And the way you create that confidence is in knowing and understanding how your strategy works and how it might act in different situations. And these are all things you can do in backtest. And backtest means running tests over historical data in the past. And you can do this by using a TradingView strategy script, like what we have on the site at www.zentradingsystems.com. And you can run different backtests and you can analyze your performance. Now, only those that want to be successful will do this. Lazy people won't do it. Only traders who want to be successful and actually want to have long-term success will take the time to do this. Doesn't mean it'll have to take a very long time, but it is something that you will have to do and have to understand your trading system. Golden rule number 8, the last final golden rule. Don't pay attention to the news or other traders. Now, have you ever turned on the TV or seen on the internet news about what's happening, maybe what may happen or what will happen? Following this and making trading decisions based on it is also a surefire way to lose your entire account. By the time something is made news, the effects of it are already priced into the stock or asset you're looking at. Many people already knew about it before you got wind of it in the news. So don't do what the majority of other traders do and listen to the news for trading. Now, others see a news article somewhere and they believe it to be true. But understand that news articles, by their very nature, are designed to inspire emotions of fear and greed. So for a trader to read such an article and then act on it by making a trading decision based on that news will trade based on emotions. And we already covered that trading emotionally will end in certain ruin. So turn off the news. Don't pay attention to it. Don't pay attention to what other traders are doing or saying. And just stick to your system. Know it, understand it, put the work in, believe in it, and pave your own path to success. Now, with all these golden rules of trading, you may be wondering, what is the fastest way to actually use all of these rules right now? So these rules all come down to having a strategy system and trading from it. On www.zentradingstrategies.com, we have developed very powerful tools, but they're simple at the same time, that you can use with TradingView, which is a charting platform and program. And we also use these tools ourselves to create consistently profitable, low-risk strategies. You can literally have a strategy up in less than 60 seconds if you keep it simple. How much time you actually want to spend fine-tuning a strategy is up to you, and sometimes less is more. Sometimes simpler is better. So with tools such as the ones found on www.zentradingstrategies.com that you can use to create your own trading strategies, you can easily develop a system that will make you feel really comfortable, make you feel really at ease, make you feel happy, make you feel successful and actually be successful and be profitable long term. and allow you to manage all your other emotions that may not be so pleasant. And we'll also provide education on how to use each strategy. Another option, if you want to fast track your success even further, you may want to consider our private trading consulting option. You can find that on our website on the footer. We can go over how to set these things up as quickly as possible, going over systems that you may find really good for your personality and your temperament, and how to get you set up right away, any tech issues, anything, just get going as quickly as possible. But even if you're a do-it-yourself person, either way, www.zentradingstrategies.com gives you everything you need to be a legendary trader. Now, kind of just a quick recap. The only way to long-term consistent trading success is to have custom strategies with trading rules that have a real edge in the markets, can compound money, and keep your risk and losses small and minimal. So whether you're a trend-following trader, a day trader, a swing trader, mean reversion trader, or a long-term value investor, or whatever else, you need strategies that can get you the best entries and get you the best exits. Your risk reward must also be kept small, and you also need to trade strategies that no one else is trading. So here at Zen Trading Strategies, we'll give you the tools and the trading rules to make these custom trading view strategies. And again, you can do so in less than a minute for any market that will appear right on your chart visually. So you don't need to learn how to code or know how to code or program on your part. We've already done all that for you. And these are the same exact tools that we use for our own strategies. The only difference is that we have our own settings that we like for ourselves, and anybody who uses these tools will create their own settings and trading rules on any tradable asset in the market. These tools give you literally unlimited possibilities and unlimited strategies you can create, and flexibility to make different strategies and trading rules with these tools. And what's really nice is with these custom trading view strategies on our site, Zen Trading Strategies, you can backtest any idea you have and see how valid your trading idea is. You'll be able to see how much profit, how much loss, what your win and lose rates are, where and how your strategy won or lost, and so much more. And if you like your trading strategy and its trading rules, you can trade it manually. So you can see it on the chart, you can see where to buy, where to sell, and you can just go to the exchange and put an order when you feel like it. Or if you want to get it all automated like we do, we've also developed trading view indicators for each strategy, and these allow you to create automated alerts on your entries, your take profits, your exits, your stop losses. And we also even have ways to get those alerts and orders sent instantly and seamlessly to almost any exchange that you use or want, and you can make your trading 100% automatic. So what that means is that you'll never have to sit in front of a computer screen to look at a chart ever again if you don't want to. Your trading can be 100% hands-off and automated and profitable at the same time. So are you interested in learning more? We do have free trial strategies, so really no risk on your part. You can try them out, see if you like them, see how to work them, ask us questions, really get a chance to see how they work for you. And we also have paid indicators, which give you the alerts at our website, www.zentradingstrategies.com. These will allow you to create highly profitable and low-risk trading view strategies and trading rules. You can make your trading 100% automated. So give us a visit at zentradingstrategies.com. Ask us questions if you have any. Look at the site. Don't get overwhelmed. It can be a lot for some people, but it's actually really simple. If you have questions, we're glad to help. Leave a comment maybe in the video, and we'll be glad to help you and get you on the right track to long-term trading success. Thank you very much.